small cap stock that is nothing but a DCA bank. Many investors are asking about that what to be done with DCA bank, because if you see in last 2 months the stock has fallen about bit from 130 to almost 130 levels. The question is asked from Mr. Gaurang and also Jyotin Pathak. So guys, today I'm going to talk about DCB Bank in detail, and we'll talk about how the future process look like. Again, why DCB Bank has fallen and what is the corrective measure you can take it, that whether you should invest or get out from the stock or you should hold the stock. So welcome everyone and welcome to my YouTube channel. Before I go guys, if you have any question related to any stock sector, please put it in the comment box. I'll try to cover in next few videos. And guys, you know, my name is Tapan Doshi. I'm a chartered accountant by profession. Do subscribe and like this channel because lot of stock analysis we are doing from this channel. Okay, so now let us talk about DCB Bank. Talking about DCB Bank, you know, it's a small cap bank and you know, it is quite a famous bank. Now let us see some data and let us understand about the how the stock has performed in last few months. So talking about that, uh, yeah. So talking about that, guys, if you see DCB Bank in last 2 months, it has fallen from 160 level to almost 133 level. If you see the stock has earlier gone from 100 to almost 160 level within a span of 6 months. Then after that, it has fallen. And now that is why everyone is concerned what to do with this bank. So talking about this bank, guys, if you compare with the competitors and everyone, so let me talk about the charts. So if you see here, the DCB Bank is the black one. Okay, so you can see this is a price chart where no we are compared with Dhanlakshmi Bank, Karur Vaisya, okay, overall banks and all that. So then all so compared to the DCB Bank has underperformed in last 1 or 2 months. There are many reasons behind that, and we are going to talk in detail about that. But before I go, let us talk about the quarterly result, how the quarterly result gone by. So talking about quarterly results, the result was like, no, it was a modest growth. Overall, the quarter was modest with earning miss and amid weak NII growth, partly offset by the lower provision. So quarter itna acha nahi tha. I'm going to show you the financials also. Again, loan growth was steady, led by healthy growth in mortgages, agri, and co-lending. So it was a steady loan growth, but not a high, you can say, a loan growth. Again, there is an improvement in CASA ratio. So yes, one good point was there's a CASA ratio improvement, which is a good point. Again, but slippages continues to rise and stood elevated, while reconsidered book remained high at 3% of loan. Now, this is where the market was having a problem, that why this slippage is continuing going. Now, the main factor is how it is going to continue in future. That is what we have to see if you really want to buy this stock. Now, let us understand about the overall the CASA ratio and all that. But okay, let me talk about the financials first. So talking about quarterly result, as I told you, the result was okay only. And if you see the June and September, December, if you see overall the net profitability, okay, it was 148 in March 23, 127 in June, again 120 in September, and again in December there. However, stock has gone up. So that is why there was a little bit of correction. If you talk about gross NPA, net NPA, guys, see in last 4 quarters, it is steady 3.19, 3.26, 3.36, 3.43%. Even net NPA, if you see 1.04, it has little bit gone to 1.28, and last in December, it was 1.22%. If you compare with the peers comparison also, no, the DCB Bank is trading quite lower. If you see P ratio, it is 7.99 only. But however, even from the current market value to book value, it is 0.91 only. So because the growth is on a lower side, if you see in the last 3 years, the growth is only 5.9%. Okay, and profit has gone up by 11.26%. That is why you're not seeing such a jump coming. Still, the lot of you can say pundits are not giving an extra premium to this stock. Correct. Even if you see ROE 10.32 and ROA is 0.96, that was below 1%. Now let us try to compare gross NPA, NPA, and CASA ratio with the other competitors. So talking about that, let us talk here about first is nothing but the net interest margin. So if you see net interest margin is well above 3%. Okay. However, the highest is having of Karur Vaisya Bank, there is 4.3. DCB Bank is 3.48. Dhanlakshmi is around 3.34 and Federal is 3.1. So it is around 3.3 above, which is okay types. Still, it has to no do better from here. If you talk about net NPA, so net NPA slowly and gradually coming down, but many other competitors are having a half of NPA which the Croatia bank is having. You can see, sorry, not sorry, uh, half of NPA what DCB bank is having. If you see DCB bank, it is 1.22%, but you can see Federal Bank it is 0.64, Croatia it is 0.42, then Lakshmi is 1.27. So Federal in Croatia is having a half of what it is having of DCB bank, and that is where the market is having a little bit of concern. If you talk about CASA ratio, now CASA ratio, the higher the CASA ratio, the better is for the company. Okay, so here if you see the CASA ratio is almost, you can say it is 26.13, which is lower than Federal Dhanlakshmi Karvesha. What is CASA? Current account, saving account. More the CASA ratio, better is for the bank, and that is where no they can give more loan, and that is where they are getting much more credit facility from RBI also. Their cost of borrowing literally goes down if the CASA ratio goes up. So currently if you see, the DCB bank is in a lower CASA ratio compared to other banks. Now let us talk about this is what we have spoken about, the data and everything. Now let us understand about the management. So talking about the management, guys, what management is speaking about. See, management is highlighting, and see, for any company, if you want to evaluate whether it is banks or any other company, you have to understand what the guidance management is giving. Because management is a true barometer. Management knows what is going to happen in this bank in future. So, isko mat ignore karna. You have to go and understand in detail about the management, what their guidance is. So, management is guiding an ROA of 1% and or above, an ROE of closer than 14%. See, a good banks normally trade around maybe 1.6, 1.7 ROA. If it is about 2% ROA, guys, it is very good. बहुत hardly कोई बैंक होती है जो 2%, means there are many banks like big banks are having over 2%, but anything about 2% is considered as a good ROA. However, you should have ROA at least above 1%. So that is where management is guiding that target will be around 1%. Again, ROE will be around 14%. If ROE is around above 15%, then it is very good. Again, bank guided for cost to income ratio 55% or lower. So lower cost to income ratio. Cost यानी आपका cost जो है, how much is there against the income in the near term, and the cost to average assets between 2.4 to 2.5%. Bank is targeting 20% loan growth and aims of double the book in next 3-4 years. Now, this is where you have to keep in mind. Bank is targeting 20% loan growth. Now, if they are able to achieve this 20% loan growth, remember, they are not able to achieve this in last few quarters, in last few years, and that is why this bank is having a lower valuation. But yes, if they are able to do this, then it is a good positive for that bank. Again, on the deposit front, the banks aims to focus CASA and its launch of new products. So yes, they have to increase CASA. As I already show you, the CASA ratio is comparatively very low compared to the competitors. They have to increase their CASA ratio. Similarly, if we take about other points, like bank will continue to add headcount of to fund the growth, the branch addition, the branch bank is looking for almost 25 to 30 branches every year. So this is where through offline also they want to increase. Of course, they will be working on online purpose also through app and everything. But yes, offline they want to increase by 25 to 30 branches every year. Again, NIMs like should stabilize financial trend. The bank is guided around 3.65 to 3.75% of NIM. Remember, we have seen there the NIM was around 3.4%. Okay. Now they 3.48 something percent, but now they are targeting of having a higher NIM. So that is a positive sign. Now let us talk about the financials, guys, and we have to think about the future prospects also. See, whenever you do any analysis, one is the present analysis and one is the future analysis. Present से base पे सब कुछ नहीं करते, future भी देखना पड़ता है. Now today I am just taking an here a privilege of taking the Motila also research report. But if you can see here, what they are saying that gross NPA, the gross NPA and net NPA, which is around in financial year 24, it is 1.2%. And basically gross NPA 3.4%, which may go down to almost 2.6% to 0.8% by financial year 26. So net NPA, hopefully they'll go down. Then also you can see the other banks are having a half of that NPA. That is a positive time point. Again, NII, if you talk about NII was around 11.5% this year estimated, but in next year and another next year, it will be 15.1 to 18.9%. So guys, they have to work on increasing NIM. If net interest margin growth increase, then that is the best positive thing happening for the company. Slippage ratio will be 3.9 and 3.2. Again, credit cost will be around zero point 0.4. And PCR. Now, what is PCR? PCR is how much of fund you are keeping aside to cover the debts, bad debts. So that is going to from 6.65 to 66 to around 68, which is a good ratio overall. Now let us talk about another important ratio, that is ROE, ROA. As I told you, ROE, ROA, they are targeting to reach to 14%, but you can see, so next 2 years, they'll try to go to around 14% from 11.5 to 12.2 to 13. Again, ROA, they are planning to having around zero point 0.9. Okay, that is okay. लेकिन ये actually 8.1 के above जाना चाहिए. This is just a forecast. I'm not saying this is going to happen, but yes, it should go well above 1 if they really want to grow. Again, if you see book value, so price to book value is 0.9, guys. Okay, ये अच्छा है. Okay, price to book value is on a lower side. That means the stock is cheaper. लेकिन which if you see a good quality banks normally trade up around at least 2 times above, 2 times or 3 times above. If you see big banks like HDFC, ICICI Bank, PSU banks may have a below 1, but to have a private bank below 1 is an exceptional case. But yes, that is what they point nine. Again, so price to book value, basically they are saying that it will remain on a lower side. And EPS they are saying maybe a growth will come forecasted. Again, this is an assumption. Maybe in next year it will be around 20% and around 23% afterwards. So 20% mid range, the EPS growth will be there. And price to earning ratio, which is quite lower compared to the competitors. As I shown you, it is below 10, single digit. Very rare you get a bank which is having a single digit price to earning ratio, so which is around 8.79, which may remain that only. That is a forecast. But yes, what I'm trying to convey is that if the company is able to work on net interest margin, again, you can say the CASA ratio, again, basically on that net NPA, if they are increased to able to increase the profitability, net NPA, they have to bring down, CASA ratio, they have to bring up, even NIM, they have to bring up. If the management is able to guide that ROA above 1% and ROE above 14, then it is quite good for the company. Now, at the current valuation, it looks like now the management is going towards that trend. So, if you ask my view, what I think about this stock, I think you should get it. You can buy this stock if you want, because I think currently comfort zone is there. Valuation is quite cheaper, and if the bank is able to guide as per the management comment, as per the management guidance, I think things will be much better from here. So that is what my take is there for DCB Bank. So hope you like this video. Hope this video was quite informative for you. I try to keep it as crisp as possible so that no, you will able to understand how to evaluate a bank also. If you follow this thing through other banks also, this will help you. So guys, if you want to learn more about how to analyze a stock like banks and any other sector in a stock, no, I've given a link below where you can attend my workshop, which is costing more than 1500 rupees. I'm going to give you as a free. So just click the link and do attend the session. And do like this video and share it with your friends and relatives. And do subscribe to our channel. And as I told you, if you want any other stock to be research and to be presented to you, please put it in the comment box. In next few videos, I'm going to take over. So thank you very much. And yes, this was been given by some of the investor only. So thank you very much, guys. I'll see you in the next video. Bye.